Let's bring in our panel now. Joe Terranova, Chief Market Strategist with Virtus Investment Partners. Malcolm Ethridge is with CIC Wealth, and the star analyst Mark Mahaney of Evercore ISI. It's good to have everybody with us. Mark, I'm going to hit this market first, so bear with me for a second because we're in the midst of, Joe, what is a pretty sizable sell-off and a dramatic reversal from, it seems, how we felt not 24 hours ago.
A very dramatic reversal that was led by a reversal in the Russell 2000 index. I was there, I was watching it, I was trading it, and I saw the reversal after Chairman Powell spoke. The mean reversion trade for small caps relative to mid caps and large caps and mega caps, it's over. It's over. The remainder of the year, I've been skeptical about the ability for small caps to outperform their equity cap size brother and sister for the remainder of the year, and I truly believe that's over. Look, everyone's going to come on the network in the next couple of days in the midst of this correction. They're going to say, this is normal, this is ordinary, everything's going to be fine. I'm going to echo that same sentiment. On the other side of this, we're going to be fine. But I think what the viewers have to understand is this is the month of August. The month of August and the month of September are the two worst months in a calendar year of the last 15 years. So the real message is elevated volatility is going to be present during these 2 months, and investors just have to be prepared for that environment and risk-off days. And today's a classic risk-off day.
You didn't say anything about the economy. I mean, this is not about the Russell. This is about economic data. Hold on.
Yep.
About economic data that was weak. Mm-hmm. Obviously, the Russell's going to be more sensitive to that.
Yep.
Bond yields are falling, as I said, below 4% for the first time since February. That's the story. Bad data is bad. There are serious questions as to whether the economy is weaker than people think, including the Fed chair, who talked yesterday about just being a normalization. There are pockets of weakness here and there, but nothing to be too alarmed about. That's what this is about.
So the other day, we talked about it on halftime, the fact that the economy was weakening and that we saw, I remember sitting here with you, we said, oh, we've got a 10-year treasury at a 4-month low at 4.1%. And I said, well, why isn't that Russell 2000 rallying in the face of that? And it's exactly the reason that you are underscoring. It is the fact that the economy is weakening, and Chairman Powell did nothing to assuage the concerns that investors have surrounding that. I'm troubled. I'm troubled about tomorrow.
What do you mean he did nothing to assuage the concerns? I just said what he said.
So he should have signaled that they are going to cut rates. He should have been firm in signaling that. He should have said to the market, we are going to begin cutting rates in September the same way he did in November of 2021. He said we're going to raise rates.
Malcolm,
he hinted around it. He hinted around the edges. Just come out and say it. Just say it.
He said
we are going to raise rates.
He said
we are going to lower rates.
He said cuts are on the table, and he said it about 20 times. When he was asked. I don't think anybody left yesterday's news conference confused about what's on the table in September.
I agree, Scott. I think Chair Powell did everything he possibly could to say September is on the way. And I think that really what we saw was a Fed chair that did everything he possibly could to have his cake and eat it too. He wanted to make sure that the Fed looks and stays apolitical, but also make sure that he did what he could to tip his hand in advance and let us know that cuts are coming, and do what you will with that information. But those cuts will be coming in September.